Good afternoon, ladies and gentlemen. My name is Elizabeth, and I'm Conference Director at 100 Conferences. We sincerely hope you benefited from all the opportunities these 3 days. And now it is my pleasure to introduce you our last speaker for today, Yael Tamar. She's co-CEO and co-founder in SolidBlock. Yael is also founder of Women in Block Association, increasing opportunities for women in the blockchain sector. She is creator of global Femfluencer list for the blockchain and crypto sector. Yael is founder of Top of Blockchain, connecting global projects with blockchain technologies. Yael is also mentor for several accelerators and startups and partner and board advisor at the Israeli Blockchain Association. What is more, she is listed in top 25 blockchain and cryptocurrency speakers and 100 most inspirational women in blockchain. Therefore, we're very happy that you are joining us today, Yael, with your keynote. So the stage is yours. Please introduce yourself and we can start with your presentation. So enjoy and good luck.
Yeah, thanks, Elizabeth. Hi, everybody. Really happy to be here. Thank you for inviting me. And I am going to share my screen and share with you my favorite topic in the world, which is tokenization as a bridge to DeFi, right? The reason why I'm so interested in finance is because over the 20 years in my career, starting on Wall Street, going through M&A, private equity, and so on, and fintech, many years in fintech. The first time when I felt like we're going through true revolution and true transformation and not just treading water was when I got introduced to blockchain. And I'll share with you guys why that is. So everything we've known up until today in finance was really centralized finance, traditional finance. This is the state in which banks govern and control people's assets, our assets. If I want to transfer funds, if I want to do payments, if I want to get a loan, most of these situations involve a centralized entity, such as a bank, an institution, maybe an app like PayPal, and so on. So DeFi, by contrast, is totally open finance, right? It goes along with all this revolution of personal freedoms, right? So we have a situation in which me as an individual could be a sole custodian of my assets. I can have a wallet on my mobile device and put my assets here, right? Now, by a slight contrast, I could also choose for a bank or another institution a professional custodian to hold my assets for me. That would be my decision, right? My informed decision. Now, this is the place. DeFi is a I don't know if we can call it a place. I guess it's a world order or an industry where you have open source algorithms, open source platforms where different developers from all walks of life can come and create applications like they do on Ethereum with ERC20 tokens. You can even create a platform. You can contribute to a new platform itself, right? Like, for example, decentralized exchanges, right? You have developers from all over the world developing the code. And you can have new instruments, new financial instruments. You can put your own house, you can NFT your house, and you can sell it to another buyer, right? So you can have traditional assets, private equity, real estate, diamonds, oil and gas, and you can have new tokenized assets. These are all like digital images that you see, art, digital art being sold. You have metaverse assets, right? So you can buy a fashion design specifically for a metaverse, for example, right? So these are kind of new assets that we're not familiar with, that don't fit into the reality. That's something that you cannot get today on Robinhood, right? You can only get in on an NFT, like an OpenSea, for example, right? So that's DeFi. And with DeFi, we see transparency of all the different operations, right? You don't have to log into some bank, download statements. It's usually open, wide open, what you need to do, what you need to repay, what you owe, and so on and so forth, right? So that's open finance of DeFi. So to recap, In the traditional financial system, you have the sender and the receiver on both sides. And then in between, you have a bunch of institutions, banks, right? Sometimes you can have dozens of institutions in one transaction if it's an international one. And by contrast, in DeFi, you have the sender and the receiver, and then you have an ecosystem of some sort of, miners, processors, or whatever the order within that blockchain will be, that's operating the decentralized finance system. I'll give you a few examples of DeFi, open lending protocol like MakerDAO, right, which dubs itself as a central bank on blockchain. It gives out loans from the community that makes up MakerDAO. DAO is a decentralized autonomous organization. Now, they have an inherent token that operates their system, a maker token. And then you also have DAI, which is a stable coin pegged to US dollar, right? Now, that stable coin is right now collateralized by cryptocurrencies, mainly USDC. And they're opening up to start collateralizing real world assets like real estate. But before you can collateralize something with real estate, first, you have to put real estate on the blockchain. And that's something that I'm going to talk to you guys about today. Now, how do we get the majority of the assets in the world today are non-digital? We have to make them digital first so that we can then enjoy the benefits of DeFi, such as getting loans on MakerDAO. Another example of DeFi are decentralized exchanges, which in my mind are really mind-blowing. You have this revolutionary feature inherent to DEX where you have users creating a liquidity pool, right? In the traditional exchange, you have to have liquidity providers, and these are usually large institutions. Remember last year when there was a whole, situation with GameStop and Robinhood, where everybody started selling different stocks, and then Robinhood had to borrow $5 billion to pay different users that were going to, that were selling stocks really rapidly, and they didn't have the money. $5 billion was not enough, so they shut down the whole trading, right? This wouldn't happen on a DEX because you don't run out of liquidity. You ask users to put their assets into a liquidity pool until, the next time when we need to dip into that pool to take some liquidity, right? And then everybody gets to split the fee, right? The trading fee. So I think that this is a really, really cool feature that we'll see everywhere, right? In the DeFi world. And this is an example of real world product. Realty is a tokenization company. They were trading, they're trading their assets on Uniswap, which is another decentralized exchange. Stablecoins, I already mentioned DAI, and there is also USDT, which is pegged to US dollar. And in fact, there's a bank where a bunch of US dollars are sitting, supposed to be one-to-one to this stablecoin. So let's talk briefly about how do we get assets on DeFi, these traditional assets. It's a huge market. Just in real estate, it's $300 trillion, right? And only 1% of that is liquid today. So imagine the opportunity when real estate would become liquid. Now, blockchain has become much more approachable for regulators. Regulators feel more and more comfortable with it. They just can't pick up the pace. Every day you have a new product, and by the time they get to DeFi, we're going to have something else, right? So what does it mean to digitize an asset? Well, there's two use cases, and it's very important to differentiate between these two use cases. The first use case is when you have a large project and you want to bring in several investors, right? In that case, we have to issue a security. We have to securitize the asset first, and then we digitize. What does it mean to digitize? Well, we record the ownership of that security or of those securities bought by several people on the blockchain. Why do we record on the blockchain? Well, first of all, we know we have an immutable record that somebody bought an asset on the blockchain, right? Bought an asset on the platform. And number two, you can use the same smart contract to trade the asset, right? It has all the attributes of compliance, who can trade, where they're from, when they can trade, they're in different lockups, right? So that's why smart contract is the perfect tool for global sales, right? So that's digitization. Now, in which situations we do not securitize? When there is one buyer for one asset, right? Let's say you have an apartment, or you have a diamond, or you have a car. Somebody wants to buy that asset for the purpose of probably owning revenue streams, or for a rental income from an apartment, or whatever reason, right? So in this case, the only thing we do is digitize, and in this case we can use standards like an NFT, where you can easily transfer ownership from one person to another, and then you can go and resell that NFT to another person. NFT is non-fungible token. All right, so I'm not going to go through the whole tokenization process. I'm happy to do that with anybody who's interested, what the security token is, how it's done, what are the rules. We have a full course on security token, on the real estate tokenization on the SolidBlock website. And anybody interested, feel free to attend. One of the most important use cases in this industry is the Aspen coin tokenization. Right, the Aspen project, the St. Regis Aspen ski resort, which raised $18 million and on the SolidBlock smart contract, and now is trading on a T0 platform. So anybody interested can actually go and buy it on T0 right now. So just to recap, what are the opportunities for liquidity in real estate or any other, illiquid asset? How can you enter DeFi? So number one, we talked about DEXs, which is a really interesting space to trade any assets. And you can also trade even, real estate and other illiquid assets on DEXs, as long as you do this compliantly, right? A lot of decentralized exchanges do not offer internal compliance. So in this case, you could use them as a bulletin board and have users come back to SolidBlock platform and any other platform you use to go through know your customer and anti-money laundering process, right? So just be careful of that. Lending is a very, very important application. Real estate historically is not only an asset, it's a tool for many, many people to get leverage. It's a very basic tool for mortgages. So imagine investment in real estate without lending is kind of taking away all that advantage. So thankfully, DeFi is a great, great space for lending. And remember the NFTs, because a lot of the transactions out there are single family. You can also sell hotel rooms. You can sell parcels of land. So those are all the use cases where you can actually avoid securitizing the project, right? So that's all I wanted to share with everybody today. Maybe just one last point to leave you with. Imagine the world in which you walk into a traditional bank today, right? Today's world. You get all these services like credit cards, payments, mortgages, investment products, and so on. And these products are available to you through the centralized entity, the bank, right? And then imagine walking into DeFi, right? Whatever that looks like. You're walking into DeFi, and then you have your real estate tokens sitting on your wallet or in the custodian. And then you have a bunch of apps. And these apps are here so you can actually get a derivative or put this real estate product into an index or buy an index or trade your token on a variety of exchanges. You can also get a loan, and you can get an asset-backed token. Even, let's say you're a real estate sponsor, you can actually create a token based on your portfolio. So all of these DeFi products and services exist in this new DeFi bank. So thank you very much for listening. Feel free to reach out to me on email or phone or LinkedIn. I'm very accessible. Take our course, and happy to discuss with anybody who's interested in tokenization and DeFi. Have a great day.
Thank you, Yael, for your presentation. Really great and appreciated. Thank you. Wishing you a very good day today.
Thank you so much. Bye, Lisa.
Bye-bye.